Today I am going to cover how the inventory, the closing and the opening inventory and the related gross profit are treated in the consolidated financial statement. And I have given in this question, ignore income taxes. If I go through this question with you, ABC owns 70% of the common shares of Sub Limited. At December 31st, 2008, Sub's inventory included goods that had been purchased from ABC at a gross profit of 60,000. What is the effect of eliminating this unrealized profit on the consolidated financial statement for the year ended December 31st, 2009? And it says ignore income taxes. Here the answer number 1 is the amount deducted on the consolidated income statement for non-controlling interest for 2009 will increase by 18,000, and the amount deducted on the consolidated statement for non-controlling interest for 2009 will decrease by 18,000. The consolidated retained earnings beginning of the year of 2009 will decrease by 60,000. The fourth, the D1 is consolidated retained earnings beginning of year 2009 will increase by $60,000. Now we have to see normally how we make journal entries. This one is very easier to remember. That is, when you have the closing inventory in the subsidiary, the entry that you will make is the cost of goods sold, say cost of goods sold, and the inventory. And here you will have a question whether the inventory needs to be debited or credited. You know that when the parent company's gross profit included in a subsidiary, then you have to remove that gross profit in the consolidated statement. So here we will be crediting the inventory with $60,000 if it was a closing inventory. Here we will assume that we had a closing inventory of $70,000. Then the closing inventory will be adjusted by $70,000. Now this entry you will make at the year end, because this inventory is going to affect the balance sheet. So I can say inventory balance sheet. Okay, so when you take the closing inventory on the consolidated, the parent's inventory plus the subsidiary inventory less this elimination is going to be taken into account. Now when you come to the opening inventory entry, you know for sure the inventory account is not going to be affected there. It is going to be cost of goods sold and retained earnings. We know that whatever the transaction that happened before, in this case whatever that happened before December 31st, 2008, if you want to make the adjustment, it has to be only on the retained earning, not on the income statement here. So we know the accounts that are going to be affected are cost of goods sold and retained earnings. Now we will come to a decision here. The question is whether the cost of goods sold is going to be debited or credited. Here you can see when it comes to the closing inventory, the cost of goods sold is getting debited. So here the cost of goods sold is going to be credited. And what is the account that is going to be debited is retained earnings. Okay. Again here we have said ignore income taxes. So here we are not going to take any tax elements. Therefore, the cost, the retained earning is going to be decreased by 60,000. So the answer for the question is going to be, this is going to be the answer, and this is going to be the answer. You know, those who have any questions, you can send me an email at info@professionals.com, and my office is located at 100 First Canadian Place, and Canadian Place. You can phone me, place, and you can phone me at 416-913-0399, and that is the way to contact me. And I hope this explains you how the closing and the opening inventories need to be treated in the financial statement. Once again, here the parent company sold to the subsidiary company. Basically, this is what you call a downstream, where the subsidiary company's opening inventory includes $60,000 and gross profit. And here the question is, what is the effect of eliminating this unrealized profit on the consolidated financial statement? I believe this will explain you how the unrealized profit needs to be treated. And again, if you have any questions, you could call me at send me an email at info@professionals training company, and my company name is ACCOM Consultants and Company.